We buy something, we use something, eventually we're going to get rid of something. Companies dispose of their plant assets that are no longer useful to them in one of three ways. There is sale, when we sell the equipment to another party. There is retirement, which means that we could scrap or discard, or we might engage in an exchange. And that's when we trade our existing equipment for new equipment. So we take a older truck in and we go and we give that truck to the dealer and we purchase another truck. Whether a plant asset is sold, retired, or exchanged, the company must determine the book value of the plant asset at the time of disposal to determine the gain or loss. Recall that book value is the difference between the cost of the plant asset and the accumulated depreciation to date. If disposal occurs at any time during the year, the depreciation for the fraction of the year to the date of the disposal must be recorded. Book value is eliminated by reducing or debiting accumulated depreciation for the total depreciation associated with the asset to the date of the disposal, and reducing the asset account for the cost of the asset. In the sale of the asset, the book value of the asset is compared with the proceeds that are received from the sale. If the proceeds exceed the book value, a gain on disposal occurs. Flip side of that, if proceeds from the sale are less than the book value, a loss on disposal occurs. So let's take a look at Wright Company, who sells office furniture for $16,000 cash. The office furniture originally cost $60,000. As of January 1st, it had accumulated depreciation of $41,000. Depreciation for the first 6 months of 2017 is $8,000. They want us to prepare the journal entry first to record the depreciation expense to bring it up to date as of the date of sale. They tell us that the first 6 months of 2017's depreciation is $8,000. So we have $8,000 of depreciation expense, and we true up our accumulated depreciation related to the equipment to $8,000, another $8,000. So now we have the cost of the furniture at $60,000. We have accumulated depreciation through the date of disposal of $49,000, giving us a book value as of the date of disposal of $11,000. We received $16,000 in proceeds from the sale, meaning that we will have a $5,000 gain on the disposal of these plant assets. The entries to record that are to recognize the proceeds received in the form of cash as $16,000. We have to remove the accumulated depreciation to date on the equipment. So we do that through a debit of $49,000. We have to remove the actual equipment cost. We do that with a credit of $60,000. And then we recognize as a gain on disposal a credit of $5,000. The gain is reported in the other revenues and gains section of the income statement, not part of our normal operations. Now let's look and see and assume that instead of selling the office furniture for $16,000, they sold it for $9,000. With a book value of $11,000 at the date of disposal, there is a loss on the disposal of the plant asset of $2,000. To record a loss, we start with what we received in consideration. So we received $9,000 in cash proceeds. We still have to close out the actual asset and its accumulated depreciation. So we debit accumulated depreciation, $49,000. We recognize the loss on disposal of plant assets of $2,000. And then we will credit our equipment $60,000 to remove our equipment. Like the gain, the loss is reported in the other expenses and losses section of the income statement because it is not a part of normal operations. Sometimes assets at the end of their useful lives have no ready market value. If this is the case, then the asset is retired. The retirement of an asset is recorded by decreasing the accumulated depreciation for the full amount of depreciation taken over the life of the asset. The asset account is reduced through a credit for the original cost of the asset. The loss is equal to the asset's book value on the date of retirement. So let's look at plant asset disposal just one more time. Overland Trucking has an old truck that cost $30,000 and has accumulated depreciation as $16,000. We're going to assume two different situations. One, that we sell the truck for $17,000 in cash, and the other is that the truck's worthless, so we just simply retire it. So for situation one, we received $17,000 in cash. We have accumulated depreciation as $16,000. And then we have the equipment of $30,000 that needs to be removed from the books. This gives us a gain on disposal of our plant assets of $3,000. Remember, that's going to be in other gains on the income statement. However, if we just have to retire the asset because it's really worthless, we start with our accumulated depreciation of $16,000. Now, the difference between $16,000 and $30,000 is $14,000. So we're going to encounter a loss on the disposal of plant assets of $14,000 to remove the equipment of $30,000 from our books.